Welcome to AARP Arizona Hispanic Connection for another very informative show. This is David Parra. I'm your host, the host of AARP Arizona Hispanic Connection. The topic today is taxes. File by July 15. File by July 15. Le recordamos que haremos este programa por 30 minutos en español y seguiremos con otros 30 minutos, en inglés, y seguiremos con 30 minutos en español para que se mantenga en sintonía en el idioma de su preferencia. Thank you so very much for staying with us today. Please know that we also do Facebook Live at AARP Arizona Hispanic Connection. If you do Facebook, we encourage you to follow our page and also to share it with your friends and family. I have a special guest today, the special guest who will be helping us in this conversation about taxes. And his name is Frank Varela. Frank Varela, he has been with us several times, and thank you very much, Frank, for always saying yes to my invitations. You are an AARP volunteer for the tax aid program. It is very unfortunate that due to the COVID-19, you or the whole enterprise, the whole effort in helping people to file taxes for free was interrupted. First of all, Frank Varela, thank you very much for joining our show.
Oh, thank you, David. It's my pleasure. I always enjoy coming and talking to you guys. You provide good information for the community, so I'm very, very happy.
And, thank you.
Unfortunately, with we can't do person-to-person contact right now with the tax aid.
Right. It is very unfortunate. I honestly do not have a feel for how many people that typically get the help with the programs are getting the program or are having issues filing, because I know that a lot of people depend on the VITA program, the AARP program, and many others. Any idea, Frank, on your end as to whether folks are having those issues? How are they navigating the filing of taxes without these free services?
No, they definitely are having a lot of problems. Typically, just in my site where I'm in Glendale, we have only done, up till they shut us down, about 550. Typically, we do 2,500 a year. So as you can tell, it's been a big effect. We've had several calls. We're trying to get people help where we can, and they're hoping that we might come back, but looking at the news this morning, I think it's not going to happen.
Okay, thank you very much. I'm going to ask you to keep the phone close by so that it picks up your voice well. Okay. I've been asked. So first of all, we do have a break at 15 after the hour. So let's get to the points here. Okay. So when are the filing due? What is the deadline?
Okay, the deadline is July 15th. If you're going to mail it in, it's postmarked by then, or if you do it online, do it by midnight on July 15th. So that's an extension from April 15th, which is a normal thing. Also, it's good for all it's also for the state taxes as well. A lot of people get what's called a property tax credit, and that usually ends on April 15th, but they extended that to July 15th. So you still have that as well. So they did extend the state as well.
Perfect. Frank, let's talk a little bit about how much taxes do we pay? I think this is a very valid question.
Yes.
We kind of need to get an idea how much taxes we pay.
Okay. Well, it all depends on your filing status. Okay, we have different filing statuses. You can file single, married filing jointly, head of household, or married filing separate. They all have different tax rates. Okay, and it's like you said, it's a progressive tax scale. So we have different tax brackets. Just as an example, if you're married filing jointly, the first 19,400 of taxable of liability will be taxed at 10%. Okay, now once you pay that, if you got higher than that, then any numbers, any tax, any income 19,401 up to 78,950 would be taxed at 22%. So as you see, as your income goes up, you get taxed higher. Now you don't pay the whole 22% on the whole thing. It's only on that amount that fits in that bracket. You still pay 10% on the first 19,400.
So basically, everybody falls into one of on that table, the tax table,
Yes.
but you don't pay. Let's say somebody falls into, say, the 24%. So they will pay some of that money, 10%, and then some at 12%, and then some at 22%,
Exactly.
some at 24%, correct?
Exactly. That's exactly right. And for example, just on the singles, the first 10% is only for the first 9,700. Whereas you are married filing jointly, it's 10% on the first 19,400. So as you can see, the tax bracket goes up quicker if you file in single as opposed to married filing jointly.
Now, Frank, help us understand how does a company know how much money to withhold from an employee?
Okay, they use what's called a W-4 form, and with
Hmm.
that W-4 form, they should give you enough instructions to fill out the W-4 form where you can claim if you have dependents, if you're married filing jointly, if you're single, and you can put in as many exemptions as you want. And typically, you should be pretty honest. It's only the money they're going to take. So in effect, what happens at the end of the year, you're going to owe you're going to have what a tax liability, and then the amount that they withheld will be subtracted. Okay, so the less amount you get withheld, the less amount will be subtracted from your tax liability. Okay, that's where a lot of people say, well, she got a big refund, I didn't get a big refund. It all depends on how much money. It's all your money, I guess. That's how I like to tell people. It's your money. You either pay it up front or you pay it at the end. Okay.
So there's no such thing as if you do it this way, you pay less taxes. I mean, in terms of the
No.
brackets, people will pay what they should pay, correct?
Exactly. It doesn't change anything. Again, it all depends on your tax liability, your income, and then we'll talk later on about deductions and stuff like that. But basically, the more money is withheld, the less money you'll have to pay at the end, and you might even get a refund. Now, the only problem with not withholding enough, okay, a lot of people say, well, I'm not going to withhold anything, is that there is a penalty. If you owe at the end of the year more than $1,000, there is a penalty that you do have to pay, starting at 2% and going up. So it's a good idea to pay as you go.
You will not believe, but I have been penalized twice because I haven't taken my time to calculate my tax liability and have the government or my employer withhold that amount. That's
Exactly.
obviously what I should do, correct?
Exactly. That's right. Yeah. And a lot of people, I try to do, since I do taxes, I have my own little program. So I always know exactly what, because I'm retired. So I had to take IRA distributions and stuff. So I always figure it out so that I'll be exactly where I won't have to pay a penalty and, maybe get back a little bit of my money.
Got
So
it.
it's a good thing. But so really, people should talk with their employers. A W-4. There's all kinds of calculation programs where they can calculate exactly how much should be taken. Okay.
If I'm not mistaken, though, I believe the penalty has been waived. I vaguely remember that I still have to do my taxes for this year, but anyhow,
Right.
there is such a thing as if you end up owing more than 1,000, there is such a thing
Right.
as a penalty, correct?
Right. There is a penalty, but like we do in tax aid, what we do is we go ahead and put in there and try to get a waiver. And
I
like I
see.
said, 80% of the time or 90% we do get a waiver. So it's good to do that.
That's
You
what I
still have to
meant.
pay it. You still have to pay it, but at least it's a little waiver.
Right. Yeah. Thank you. Thank you for joining our show today. This is David Parra. Frank Varela, an AARP volunteer with the Tax Aid Program, which is an AARP Foundation program, is with us today. We are close to our first break. We are talking about taxes. Please know that the deadline has been extended to July 15th. Now, I received IRS emails, and it says that you can still request, if needed, an extension to file, but there will be no extension to pay if you owe taxes. Is that correct?
Exactly. Yeah. If you do owe taxes, you can file an extension, and be sure and file an extension before July 15th. And if you do have to pay taxes, you can pay them then and not get a penalty. That way you have till October to actually file that extension. And we provide that. Well, like I say, we provide that as well, an extension for you.
Perfect. So folks who need more time, they can get an extension until October 15th, but the tax liability cannot get extended. It is July 15th, correct?
15th, right. And what it'll be a little interest. It'll be interested.
Ooh, that's very interesting.
Right.
When we come back, we're going to go on our first break. I would like to ask you, because I am all for people learning to file their own taxes. I believe especially those that have simple forms would be able to do it with very minimum learning. The systems are very good, and they would be saving a lot of money. So let's pick up on that topic when we return. How about, Frank?
Sounds good. Good idea.
Perfect. Thank you so very much for staying with us. This is AARP, Arizona Hispanic Connection. The topic today is taxes filed by July 15. We'll take our first break. We will be right back.
Blanca Irives y John Herrera te invitan a escuchar Mi Dinero, Tu Dinero.
Hola, soy Blanca Irives y te daré información sobre impuestos, el número ITIN y todo lo relacionado con tu negocio, como licencias y LLC.
¿Qué tal? Soy John Herrera, autorizado por el Estado.
Thank you. Thank you for staying with us. This is AARP, Arizona Hispanic Connection. Again, we are addressing the topic of taxes, and Frank Varela, an AARP volunteer, is with us today. So Frank, you help a lot of people as part of the AARP tax aid program. I have to assume and believe that for the most part you deal with the basic cases, correct? Not the complicated ones.
Yes. Right. Yeah, we do basic cases. We do have a protocol where we can only deal with certain cases, and with small business maybe, but that's about it. So we don't get into the real CPA type of cases.
Right. So I'm very much for people filing their own taxes. We have in our own family have trained my daughter, my son. I do my own taxes, except when I had a little bit of a complicated case. That particular year, I did go to a professional tax preparer.
Mm-hmm.
But would you say that if people spend a little bit of time learning the basic concepts of taxes, that they would be able to basically do their own taxes?
Yes, definitely. All they just need to understand what taxes are, what deductions are, what like we said, the different filing statuses, and it's really not that complicated. And a lot of people get scared just by the word taxes, but it's not that difficult. It really is pretty simple.
Got it.
Have a little
And
bit more complication.
so, if I remember right, I have to pay in the neighborhood of $170 to file my taxes. And this is basically the software that I use to file my taxes.
Right.
So there is a threshold, an amount that if somebody stays below that threshold, the IRS allows them to file for free. Is that correct?
Yes, that is correct. Yeah, and I believe the threshold is like 69,000 below.
Okay.
You
Right.
can file for free, and they're very helpful. They guide you through it, so it's good. It's a good program.
So if people make $1,000 or less, the idea would be to go to the irs.gov page, correct?
Yeah, exactly, exactly,
And then they would go to free e-file,
exactly.
and
Free
then they
file.
would be led to basically either to answer some questions to see if they qualify for the free e-file.
Mhm.
But if they already know that they do, they can literally pick the company from that list. I know because I helped two individuals to do that in that process.
Yes, exactly, and they have several different tax firms that they'll help out.
What you do not want to do is go to the website of a company directly, right? You want to go through the IRS page, correct?
Exactly. Go through the IRS, and it'll be a lot. Otherwise, you might have to pay quite a bit. And it's
Got it.
and typically for the electronically filing the federal, there's typically no cost for that. The state, it might be a little bit of cost, but other than that, it's good.
You know, and one of the amazing things about this is that basically the questions that a person, a human being tax preparer would ask the person, the software, the program will ask you pretty much the same questions, and all you do is plug in the numbers, correct?
Exactly. That's exactly true. And actually, even as tax preparers, the ARP Foundation uses Tax Slayer, which is a program, and we basically go through the program, like you said, asking questions of the person. Okay, and then and it's good because the filing electronically is really good because you know within a few hours whether it got accepted, and it's a good protection against identity theft. For some reason, somebody already used that, come up and say, "Hey, you're already filed." So it's a good thing. It's a good thing to file.
Right. Perfect. Now, one of the things that that I would like to ask you to help us understand
Sure.
is the so-called standard deduction.
Okay.
Because in preparing taxes, a lot of people want to do what sometimes is called a long form, right? The long
Right.
form.
Exactly.
Obviously, the technical term for that is to itemize.
Exactly.
And we know that the standard deduction, Trump's administration reformed some of the tax system and within that restructuring or changes, the standard deduction went something like from $6,000 to $12,000 for individual, and from $12,000 to some $24,000 per couple.
Exactly.
What is the so-called standard deduction?
Okay, the standard deduction is if you're a single, you're going to get at least $12,200, okay, of deduction of your tax liability. So if once you get the adjusted gross income, okay, then you're going to deduct 12,200. That's without a doubt. I mean, that's standard. If you have more deductions, like you said, if you itemize and go higher, you can go up to 25, 20, whatever you have. And it's good for the married filing jointly because that's 24,400. And if you're 65 or over, you got an additional $1,300. So, for example, a married couple, 65 or over, they will get 27,000 of deductions.
Mm.
Now, a lot of things, what happened is when they went to this higher standard deductions, it was good. But what happened is it took away the personal exemptions for the people and for the children. Okay. It used to be in 2017 or 2017 that they had $4,050 for each individual, husband, wife, and each kid. So if you had 3 kids, right there would be a $20,000 deduction plus the standard deduction, which was lower then. But, so in effect, they took away one and gave you another one. So
yeah, it's interesting because in my case, frankly, I know I could never come up with $24,000 worth of itemized items. So I automatically know that that it's going to be in my best interest to select the standard deduction. And these softwares, typically they'll take you through these calculations, and eventually they say, well, we recommend that you take the standard deduction, and that's pretty much what ends up happening in most cases, or in many cases.
80% of the people would probably go with standard deductions, I would say.
Wow,
there's very
80%.
Yep, there's very few, especially as, like I said, it's a pretty high deductible, especially for a married couple that's retired. That's $27,000 of deductions. And hopefully you don't have, typically it would be medical costs, and hopefully you don't want those. That's probably what adds more to it. So so typically it's good. It does affect other people, like people that depend on donations, because now people usually give donations so they can deduct that, and now they don't have to. I mean, it doesn't help as far as their deduction. They should still contribute for sure, but a lot of times people say, well, I'd rather donate it than give it to the government. So, but that's here or there.
Right. In one instance, I basically just walked through this friend of mine, to find the company, whereas on another case, I actually help the gentleman answer the questions, and it's relatively simple. Like I said, if anybody knows how to use a computer, they feel confident in navigating the internet, they definitely could file their taxes for free, right?
Yeah, definitely good. It is, like you said, it's very it's proficient. It's very simple to use.
Right. Let's talk a little bit about the credits. So the thing here is, I mean, obviously, I've never met anybody who says I love to pay taxes, right?
Right.
Typically, we don't want to pay taxes. So what's the idea in filing taxes is to lower the taxable amount, correct?
Exactly.
And then, if possible, lower the tax liability. So I always break these two concepts into these two, right?
Exactly.
First, you want to get your gross income as low as possible so that only that amount gets taxed.
Right.
And then after you know how much tax you owe, you want to get those credits to even lower the tax that you owe.
Exactly.
Can you elaborate just a little bit on those deductions and credits?
Sure. So when you get your adjustable gross income, okay, that is the stopping point, I guess, or where you have what your adjusted gross income. That also gets transferred to the state, because the state has different deductions. But it's very important that adjusted gross income goes to the state. So now what you do is you can take what's called non-refundable credits. So let's say, for example, the child tax credit is one of those. You have other non-refundable credits, like if you have education credits, retirement savings accounts credits. So what non-refundable means, let's say you owe $3,000. Once you calculate your tax liability, it's $3,000. If you have non-refundable credits, like I said, with child tax credits and so forth, of $4,000. Okay, so now you owe $3,000, but you got $4,000 of non-refundable credits. You can use the $3,000 of the $4,000 to get that down to zero.
Okay.
You cannot use the other amount. That goes away. You lose it. Okay.
Okay.
So that's a difference right there. So of course, if you only have 2,000 or let's say 500, then the rest of it you still have to pay taxes. But then you also have refundable credits. Okay. Now the refundable credits are good because even if you don't have a tax liability, you still can use them. So if you have $1,000 of refundable credits and you don't know anything, with that refundable credit will be refunded back to you. Okay?
Got it.
And that's where the difference is on those. Okay.
We have to. We're almost out of time, Frank. But I still would like to ask you just to share just a little bit. We have seconds now.
Okay.
About the fraud. Why is it important to file as soon as possible?
As soon as possible is the best thing because electronically, when we file, the IRS covers everything. They check to make sure that all your 1099s, all your W-2s are all correct, that you're not frauding, and that nobody else has used your Social Security number or your children's. Okay, so that's really well, and it's recommended. We do have a lot of times where couples that are divorced, they both try to claim the child. So the first one to claim is the one that gets it. Once the other one files, he's going to say, no, you can't have it. So,
Frank, thank you so very much for joining our English show. Stay tuned. We're going to do the Spanish. We're going to disconnect totally. I'll send you another link.
Okay.
And we'll restart the show in español. Gracias.
Right.
Thank you so much for joining our show today. We'll be right back with the Spanish show.
Okay. Thank you.
Thank you, Frank.
Thank you.